If rates are changing, rates are decreasing, this encourages people to get off the fence. They're getting off the fence. So just them decreasing a little bit, it makes a big difference. And then we should see how by the end of, I would say by the March market update that I do, we're going to see how the current interest rates dropping have impacted the market. What's going to happen? Uh, Next here we have policies and rules, Florida insurance reforms, condo rules, investor policy. This is going to be big. We already mentioned some of the condo rules. Insurance has always been something to be mindful of and keep an eye out for. So continue to keep an eye on that. Insurance can be a little tricky. So I want to encourage people to be mindful of that. If you're looking at a particular property, especially when we had the multiple hurricanes have really impacted how things are moving forward because it makes a difference in that monthly investment. So if you have insurance that's reasonably priced, you're good. But if not, if it feels like another mortgage payment, that can be a deal breaker for you. And then investor policy. So this is something that's coming down the pipeline. It hasn't officially happened, but institutional investors, it's they're not liking that, and that's basically, if you guys aren't familiar with it, there was a period where you had these large hedge funds that came. I can say specifically for the Tampa Bay area, they came into the market and they were buying multiple homes. When I mean multiple homes, they were buying up communities. I mean, and they bought so many homes that they had to spend. I remember I was talking with one hedge fund, and they had to spend anywhere between 4 to 8 million. That was their game shot. 4 to 8 million per month. So that's them buying properties at these deep discounted prices, going in. And then what happens is now they're actually, when they have that much inventory, they can control the market. And that's what was happening. They were controlling the rental market because they would buy these properties, hold on to them, fix them up, hold on to them, and place renters and tenants in there. So with that being said, they can set the price. Available properties that were out there, if you wanted a house that was, pretty decent, because like I said, they're fixing them up, painting them up, doing different things to them. If you wanted that property, then what you would do is then you would actually have to pay that price point. And then that's what was available. You'd be like, oh, I don't like that property. So then you go down the street and you go look at that property, look it up, you call the number, and you find out it's the same company that owns that property down the road as well. So they're controlling the market. So that's what I want to show up for you guys. So, keeping in mind, health is wealth. We'll stick to that. Health is wealth. Um, these show up in your payment, stress level, and timeline. And these are the different things, the forces that are out there, because this is going to show up in that monthly payment that you have to impose. So keeping that in mind as these forces are changing, health is wealth beyond the numbers. Housing choices impact stress, sleep, and family life. Yes, yes, it does. Like I said, if you're house poor, you're not going to be able to do much. You're going to be at the home. You're always concerned. You don't want to. If anything happens on the job, everything is fickle. You're concerned that you're gonna mess things up. If you mess things up, you're gonna at your job, you're gonna not be able to make the payment. You're not gonna have. It's gonna impact the family where they're staying at. You're not gonna be able to sleep at night. Make great financial choices. Be mindful of it. Be mindful. Overstretching a payment, chronic money anxiety, a smart strategy, a payment you can breathe with. Yes, try to work with payments that you can breathe with, keeping your health in mind as you're going through this process. Real estate should support both your health and your wealth. Like I said, ownership is big. I just finished a podcast and we were talking about ownership. With that being said, ownership is a great way to earn freedom. And when earning freedom, you want to make sure that you're doing it in a healthy way. Make sure you have purpose behind it. So making sure you have purpose. If you're going to make the sacrifice, make sure you have purpose with it, health and your wealth. Keep being mindful of it. Additionally, here where mortgage rates are. Yeah, the information that a lot of people have been asking me about. Where are these mortgage rates at? 30-year fixed, roughly 5.8 to 6.2. 15-year fixed, mid five range for many borrowers. Some quotes now dipping below 6%. Yes, this is very cheap, very strong for very strong borrowers. So this is how you can position yourself. Get your credit right. Get your credit right. Get it right. Get somebody to get it right. Tighten things up for you. Rates still bounce daily. You can't time them perfectly. Right. And that's what it's all about. I know we want to time it perfectly. We lived in the 3%, sub 3%. We were spoiled. That spoilage is gone. That spoilage is gone. So keep that in mind. But it is about, still making it happen. So what else do we have here? All right, financing strategies in the 5 to 6% world. Leverage seller credits, buy downs. This is how you can get to those points. Go ahead, leverage the seller credits. Go ahead and do buy downs. Consider 15-year loan only if cash flow is strong. And this is, I would say, it's on the. I'm big on saying this. This is on the investing side, especially when they talk about the cash flow. If you can get away and still make means meet and do a 30-year mortgage, you have the lower payment. If you want to have the benefits of paying off in 15 years, well, you just make an extra payment. Make an extra payment, continuously make an extra payment. And with that being said, if life does happen, it doesn't impact you as much as it would if you didn't have that option of not paying the extra payment. You just make the one payment instead of two payments. So keep that in mind if you do decide to go that route. But always speak with someone to help advise you on that. Otherwise, solid 30-year plan with potential future refi. If you're looking at the payment, different things that may occur. But I said, if you're making that extra payment, you're going to be buying it down. That inch the principal, you're going to be buying the principal down, getting rid of that interest, tapping into the principal, and then you get to a point where you may be able to do some type of refi because you won't have, say, if you do have mortgage insurance, you can get it past that, below that 80%, be able to move forward. Focus on sleep at night payments and 3 to 6 months of reserves. So a lot of ways of having a solid foundation is having understanding what your monthly expenses are and then saving up 3 to 6 months of those. So if something does happen, life itself, you have a way of rebounding, being able to ride the wave, so to speak, as we say, ride the wave. Um, where I see opportunity in 2026. So this is a big question because it comes up a lot, because people are always asking, what should I do this year? What should I be mindful of? Florida buyers, real room to negotiate prices and terms. If you're in a position where you are buying a home, you do have some negotiation room. You may not be able to knock sellers across the head, but there is some room to negotiate. But be mindful of what you're negotiating for. Like I said, those rate buy downs go a long way. Understand if you're going to need to make repairs to the property, go ahead and add that in there if that's a possibility. Tampa Bay, strong location with more balanced dynamics. Yep, things are definitely different than the national uh, report. Investors value added, single family homes, selective condos, small redevelopment. So value added has been a huge thing. I've been talking about that for the past few market reports, finding ways to add value to a home. And this may be the game winner for a lot of people. If you're in a position where you're concerned about cash flow, concerned about earnings, if you're in a position, especially one way of adding value that's been very popular, especially in the Tampa Bay area, individuals are adding ADUs, auxiliary dwelling units, onto their property. So if they have an older bungalow, 3 bedroom, 2 bath bungalow that's on a large lot. What they're doing is cutting or are placing another unit. A lot of people may call it a grandma unit, mother-in-law suite, whatever it may be, but it's another unit where someone else can live that they'll pay rent on. So you can receive cash flow from that property and apply that towards your total mortgage. So if you have a unit that's say 1 to 2 bedrooms and you're receiving additional, I don't know, $1,200 to $1,600 a month from that one unit, that goes a long way. That goes a very long way. And there's different incentives that are involved that's out there that the city in the county is paying for. They have different incentives that will give you money towards that. So keep that in mind if that is something that you're looking to do in 2026. And then for our move up buyers, chance to trade up while others stay cautious. Like I said, people are getting discounts. So if you're in a position where you're looking to move up, you have people that are putting their properties on the market and maybe sitting there for a little bit longer, but they don't have the buyers that may be interested. So it may gives you a little bit more leverage to negotiate. Like I said, it's not slapping them across the head, sellers across the head, but it may give you leverage to negotiate on certain terms. So keep that in mind. Key risks to respect. Underestimating insurance, taxes, HOA costs. Yes. That try to get a grip on that, especially with the HOA costs. If it's a condos and condos are going through assessment, taxes. Keep in mind if the property that you're purchasing, if it wasn't homesteaded before and you're running the taxes with someone else's non-homesteaded, those taxes would be a little bit higher versus if it was homesteaded, taxes are a little bit less. Insurance, keep in mind where you're buying the property, see if it's going to require any additional insurance costs. Buying into buildings with weak reserve structural issues. Yes, those condos, be mindful of them. Try to make some smart decisions when you're buying condos these days. Over leveraging if prices stay flat for a while. Yes. So that means that some people are playing that equity game. Yes, you know what I mean? Playing the equity game, thinking that the market's going to significantly increase and you can make your wins through that way. No, be mindful. Make sure it works in today's market. That's how you predict your future. It's going to work in today's market. Uh, Analysis paralysis. Yes, waiting for the perfect conditions and missing deals. Yeah, that's analysis paralysis. Yeah, that happens to a lot of people. We can talk about that for a minute, but everything's not going to be perfect. See what works for you, see what's going to be ideal for you, and then move forward from there. My 2026 decision framework. So, what I want you to be in the know about. Know your numbers, payment, reserves, real monthly costs. Yes, real monthly costs. Know your timeline 3, 5, 10 years. How long are you going to stay in the property? What are you going to do? If you're investing, how long are you going to keep the property? What's your buy and hold strategy? You plan on holding for 5 years? I wouldn't say 3 years, not in today's market, not at right now. I'd say definitely at least a minimum of say 5 years holding. If you're doing a buy and hold, a minimum of 5 years. Also looking at if it's something that you're buying and holding and staying and living in, buying and living in, consider your career path. What's going on career wise, relationship wise, family wise. How big is your family? Really kind of put that in mind. Are you getting the home that will suffice the family for the next 5 to 7 years, or are you trying to get that forever home? Is that a wise thing to do? Or is it more opportunity if you get the home that's going to suffice the family now and get it at a discounted rate and discounted number, and then come time to move up, say in 5 years, now you have already built in equity that you can have go towards that forever home. And you wouldn't have had that before. So keep that in mind. Let's make some great financial decisions moving forward in 2026. Another know your why, lifestyle plus wealth building goals. How does it fit into what you're trying to do? Like I said, just with the forever home, how does it fit? Right now, it's more about having something for the family. It may fit with where your job is. It may fit where the schools are, convenience are. If you can get that great property for right now at a deep discount and that you're moving in day one with equity, oh, it's going to pay off in about 5 years. Yeah, it's going to pay off because, like I said, you can imagine the rates going up at least, home price rates going up at least 3% each year. After 5 years, that's 15% plus I don't know, maybe you got $100,000 in equity when you first bought the home. Now you have more equity in the home. You can put all of that towards your new forever home. Down payment you won't have to worry about. Possibly already good enough to be 20% down. You never know. So keep that in mind. The last no or match, I would say match property and financing to that plan. Whatever your plan is going to be, make sure that the property and your financing falls in line with that. Don't over leverage yourself. Let's not do that in 2026, okay? Don't play the equity game. Don't play the equity game. A lot of people are losing their homes by playing the equity game. We've seen that back when the crash occurred. Everybody was leaning on the equity, and equity just did not happen. So, asking anything, questions, Q&A. This is a great time to do the Q&A. Um, I do have some questions that did come up. A lot, I admit some folks reached out to me beforehand because they had some questions. So we're actually going to go over those questions initially here, guys. I'll go ahead and type something in a queue right here. All right. All right. All right. So I'm gonna go over a couple of the questions. Where is my sheet? Okay. Got my handy Daniel cheat sheet here. So, okay. So a couple of questions here. So asking anything about buying, selling, or investing in 2026. So a big thing that I'm telling people about investing in 2026, finding properties that you can actually add value to. Property that you can add value to that a lot of people are doing right now. They're finding these homes, bungalow style homes that great 3-bedroom, 2-bath home that sits on an oversized lot. They're taking that oversized lot and they're adding an additional property to it, typically called an ADU. ADU, auxiliary dwelling unit, in-law suite, whatever you want to call it, house in the back. So the house in the back, they're actually renting those out. They're getting additional revenue from that property. Like I said, if it's 1 to 2 bedrooms, $1,200 to $1,600 a month. Certain areas you're getting a lot more than that. I spoke with a guy; he was getting 2,200 for a 1 bedroom ADU that he has. 1 bedroom, kitchen, like a 1 bedroom apartment basically, and he was getting $2,200 a month from it. So, but it was right downtown area. Da 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 da. Great location. People, convenience, everything was there. $2,200 a month. So you can imagine the cash flow that he was getting. The property in the front was a 3 bedroom, 2 bath. Great opportunity for him. Happy for him. Happy, happy, happy. So those are the type of things that you can do in 2026 when you are investing. Look for ways to add value, and that's ways to add value. It may be adding an extra bedroom with extra bathroom. I've seen some of these 3 bedrooms, 1 bath be converted to 4 bedrooms, 2 bathrooms, just because it had the space under the roof and they were able to make those conversions. It cost them a little bit of money, but at the end of the day, it's an investment and it was a smart investment. So now that you have a property that's 4 bedrooms, 2 baths, you get more rental income from that. With that also being said, it is a buy and hold. That's not a buy and flip. Now, could he have flipped that? Possibly. Possibly. Depends on what he was looking to do. I mean, he could have if he wanted to test the market. It's a great looking property. Also, what else we got going on here? Uh, bring specific Florida or Tampa Bay scenario. Okay, so I did talk about the different scenarios that a lot of people are doing here in the Tampa Bay. Financing questions, DSCR loans, debt service coverage ratio. This is a big loan for investors right now, DSCR loans. I'm working in cahoots with a development project. Uh, Marriott, if you want to own a condo, a Marriott condo, contact me. I have some insight. 175,000 will get you in the door. So keep that in mind. In Madeira Beach, right on the beach. So Marriott condo on the beach. I got more details for you. $175 will get you in the door and have you able to control this particular asset that is cash flowing and producing for you. So more details, contact me if you are interested in that. But those are some of the things that are happening that people just aren't aware of. Start looking for the information that's out there. Opportunities are there. It's not just about buying a property or even selling your current home. It may be an investment opportunity for you. Keep that in mind. Other questions that have come up, what do I anticipate moving forward? I do anticipate us to have some fluctuations with the interest rate. Interest rates, we're going to see this situation happen from now, I think, until the end of summer, where you're going to see some fluctuation with the interest rate. I'm telling everyone, and I have been telling everyone, stay ready so you don't have to get ready. These opportunities are going to hit the market and it's going to match for you. people are in positions where they're willing to give these deep discounts because they have to move to their next property, or they're not willing to wait. They just want to get it sold and get it done with. They don't want to hold on to a property. Or if they've already moved and they have a vacant property, they're like, hey, let's get rid of this house. You know, I don't want no more trouble. No trouble. I don't want no trouble. That's what he said. I don't want no trouble. So that's what's been happening. I saw a property. It literally hit the market. Someone sent it to me in the late evening. I checked it out that next day and it was already under contract. But either way, they weren't even ready to financially qualify. And what I mean, so that's what I mean by stay ready so you don't have to get ready. Now, probably if we were in a position where we were able to go ahead and make an offer, I would have did it that night. But they weren't in that position where it's like it didn't matter if I did it that night or the next morning. So with that being said, stay ready so you don't have to get ready. Find different ways to maximize your current situation. Clean up your credit. See what you can do to maximize so that you can get the better interest rate right now. Have that looked at. Let's have that looked at now, because something that may be there that you may not be aware of may take, 30, 60 days to get cleared up. And if that's the case, you're definitely out of the deal. So keep that in mind moving forward. As we are doing things in 2026, opportunities are going to be presenting themselves, and I want you guys to be ready. I want you to take full advantage of it. So next steps, offers, deal or no deal 2026 strategy session. Bring to me. If you have a deal and you have questions or you want to know what your next steps are, feel free to reach out to me. So I do have, and you should be able to see it, where you can set up a one-on-one with me. That's a free consultation that I offer everyone. Feel free to chime in on that. Click on that free consultation, set your appointment, and I'll chat with you. Florida discount. See where you can negotiate. There, like I mentioned, if you need to, go ahead and listen to this again. See, there's different ways that you can negotiate. It's not so much just the price, it may be the terms that you may be looking for. Get those interest rates brought down, because just because the total cost is given to you less than what they ask, you may still have a higher payment, where that same impact could have went towards buying down the interest rate. Buying down the interest rate would have caused you to have a less of a monthly investment. That would have been the bigger benefit. Um, Exit strategies. Make sure 2026 equity and exit check for current homeowners. Know what your next move is. Not everyone has to sell right now. Those who do need to sell, understand what your next move is and understand what's involved. Some people are moving and they're renting, and some people are moving and try to buy again. Understand, if you're trying to sell and buy, there's going to be a lot more moving parts. A lot more moving parts. So there's going to be a lot of unpredictables that you're not going to be able to predict. So it's not that you can't deal with it, but it's just one of those scenarios. Just be prepared. You can't ask someone to tell you step by step. Just understand that these are some of the things that happen, and you may need to stay focused on the ultimate goal is making that transition versus, oh, I don't want to give it at this price, so I'm still going to hang on to it. And you don't get your initial property sold, but you need the money from the sold property to go towards the property that you're planning on buying. So understand how that interchanges. Also, register for the next month's State of the Real Estate Market. If you haven't done so already, be sure to like, subscribe to the YouTube channel. I appreciate it if you did do that. Like, subscribe to the YouTube channel. More information coming up in the near future. We appreciate everybody really chiming in. And for those who are, like I said, first time, go ahead, hit the likes. We like the likes. Thanks for joining me. State of Real Estate Market. This is the February edition. This is what we do each month. We have more information that comes out during the month. So be sure to chime in through social media. You can follow me on all social media handles, at Chris Brown RE Pro, Facebook, Instagram, LinkedIn. Very good on LinkedIn. Be sure to do that. Set up your one-on-one, and if this information helps you, share it with someone else. It may help them as well. So sharing is caring. That's what we say. Sharing is caring. So with all of that being said, guys, I appreciate you tuning in today. I greatly appreciate you. This is the February edition of State of the Real Estate Market. See you later. Take care. And once again, let's have success in 2026. Let's keep building. Take care.